Hello guys, welcome to Stacking Stocks, and many thanks for joining us today. Once again, we're here with more informative content. Are you ready for today's session? Today, we'll discuss how you can get rich with NIO stock. Before we begin, you need to know that there is a huge difference between getting rich and getting rich quick. Nobody should promise you speedy and guaranteed riches, but investing in certain stocks over the long term can make you very rich. One such stock is NIO. We'll look at what investing in NIO stock entails. Let's find out why NIO is one of the best stocks to buy. About a month ago, President Joe Biden took a big step towards his goal of slashing greenhouse gas emissions by 50% by 2030 by issuing an executive order aimed at making half of all new vehicles sold in 2030 electric. Although the U.S. electric vehicle market has been growing fast in recent years, it still lags behind markets like China and Europe, with the U.S. representing only about 17% of the world's total stock of 10.2 million EVs, compared to a 44% slice by China. The Chinese EV market is growing so fast that the country is now faced with a rather interesting conundrum: extreme market fragmentation. Companies like NIO are encouraging thousands of companies to join the EV bandwagon. At first, many people did not have so much faith in electric vehicles. As much as there was pressure to reduce greenhouse emissions, people did not know what to expect from the EV industry. Is it the best solution yet? Many companies are jumping into the EV industry, thus leading to a bloated and highly fragmented industry. That means that EV are performing better than most people anticipated. What did you expect from electric vehicles? Did you think that they would do this well in the market? Well, we do know that the future is EV, even in the stock market. Did you know that the Chinese auto market is the largest in the world? It is the major source of revenue for most of U.S. car companies, including Tesla, which is the biggest player in the country's electric vehicle market, thanks to its Shanghai Gigafactory. As you can see, the Chinese auto market has played a big part in Tesla's success. Is it time for NIO to shine? We will see how it goes. Several Chinese electric vehicle startups are poised to challenge Tesla for a slice of the Chinese auto market, and NIO is one of those upcoming EV-making companies. But where is NIO currently in the auto market as well as the stock market? For starters, let's compare NIO to Tesla. The latter is the largest automaker in the world by market cap. NIO has been pushing itself to meet its set target. For instance, the company strives to meet the delivery on 5,000 cars in 1 month, whereas Tesla is delivering more than 48,000 cars a month. Can you note that there is a huge difference? As a matter of fact, Tesla is way ahead of any other electric vehicle-making company. However, NIO may have an advantage in the Chinese EV market, which is expected to be worth more than $800 billion by 2027. Are you wondering about what we're all talking about? Here is why NIO might just be the kingpin in the Chinese EV market. NIO is focused on full-sized electric SUVs, an undeserved market niche, but recently rolled out its EC6 Coupe SUV, what we'd call a crossover. The EC6 is much cheaper than Tesla's comparable Model Y, and due to its lower cost, is eligible for Chinese government subsidies that Model Y buyers can't take advantage of. There's certainly no guarantee that NIO will be a long-term success, but as the company grows, it's reasonable to assume that the Chinese government may hit the playing field in favor of it and other domestic manufacturers. But as the company grows, it's reasonable to assume that the Chinese government may tilt the playing field in favor of it and other domestic manufacturers. If NIO comes to dominate the Chinese electric vehicle market, an investment now will seem prescient indeed. All factors considered, NIO seeks to appeal to both the local market as well as the government. If you're an expert investor, you'd know that the consumers as well as the government are key players in every industry. And we can see that the key players in the Chinese auto market are leaning towards NIO. Not expressly, but the indicators point towards that direction. The Chinese EV-making industry has come a long way. In early 2019, China was home to a staggering 635 companies making new energy vehicles, including electric cars. However, only 80 of those have had an actual product to show for their efforts by the end of the year. The number of new Chinese businesses related to new energy vehicles surged by 81,000 this year through mid-August, bringing the total to more than 321,000. That's in addition to the 78,600 new energy vehicle businesses that entered the fray in 2020. The auto market has become more electric as the demand for EVs increases. We can attribute this to the fact that people have become more sensitive with the environment, and this cuts across all industries. That's the reason why electric vehicles are becoming more and more popular. Have you gotten yourself an electric vehicle? If not, are you at least considering it? You probably are. That's why companies like NIO are set to reap huge returns. But even so, that's not a guarantee. Let's look at the numbers involved. Sales growth has remained a bright spot. In the first 8 months of 2021, sales of EVs in China more than tripled to 1.48 million units, compared with a 17.1% increase for the overall auto market. In sharp contrast, the U.S. market is dominated by a handful of players, with Tesla Inc., NASDAQ TSLA, General Motors, New York Stock Exchange GM, and Ford Inc., New York Stock Exchange F, combining for 80% of the BEV market. The U.S. EV market is not as congested as the Chinese EV market. The number of EV companies in the EV market is alarming, and even the government knows. Have you heard that China is looking to consolidate the market and limit new entrants? That seems like the perfect move. Ideally, having so many players in the game is bad for business. The latter only serves to limit businesses from growing bigger and better. Startups cannot grow when many more keep springing up. Don't you think it's necessary to draw a line on who should join the EV bandwagon? But what is the solution? We think that electric car makers should probably merge and restructure in a bid to drive more investments in advanced technology. There's little question that clean energy and EV themes have been garnering lots of entrepreneurial attention in China. We have established that investors pumped in more than $12.7 billion into 50 electric car-related projects in the first half of this year. It looks like everyone is trying to join the bandwagon. If you can't make the EVs, why not invest in it? There are several ways one can be part of the game. In this case, investing is also an alternative. Last year, NIO shares surged more than 1,000% after a $1 billion cash injection by the state-led group of investors. This is quite remarkable. But does it appeal to your investment portfolio? Do you think you can consider NIO stock for your portfolio? We do know that even China's smartphone and internet giants, including Xiaomi, Huawei, and Baidu, NASDAQ BIDU, have been unable to resist the allure of the EV, jumping into the electric car race last year with sizable investments and business partnerships. We have realized that this kind of thing happens often in the Chinese market across diverse sectors and inevitably leads to a race to the bottom where companies seek to compete solely on price. That being said, the race for the top EV-making company will push the stock prices of these competing EV companies. With more and more companies from other sectors also joining the bandwagon, there is no stopping the EV revolution. For a long time, people have battled against environmental pollution. Are electric vehicles the answer to pollution? That remains to be seen. China's top EV names have lately hit the skids, with shares of NIO down 21.2% in the year to date. But that should not deter you from investing in the stock. The Chinese EV market remains healthy and investable. With the future being electric, NIO should be part of your consideration. That's all we have for you today. Remember to like, share, and subscribe. Until next time.